We missed, we were correct on number one and we were wrong on number two. It's B, variable life.
Okay.
All right. What business is entity? This number three, by the way, is very testable.
Okay.
All common.
Which business entity is easy to establish and has relatively low startup costs? Um, I know the easiest to establish, I
Mhm.
believe, I believe is a sole proprietorship. It's either
Yeah,
A or B.
it's A,
Okay.
right? Because that's very much a test question because you said easy, and that means easy usually means lower cost.
Yeah.
Easy goes with,
And
uh,
why is it easier than an LLC?
well, because you don't need an attorney to set up a sole proprietorship. What are the disadvantages of the sole proprietorship? Unlimited liability.
Yeah.
You and the business are one and the same. They do have a question about a husband and wife who have a family business organized as a general partnership. And they may ask you on your exam, why would they consider dissolving the family general partnership and forming an LLC? And then you would say because of liability. That shows up.
Yeah.
The other thing that shows up is the S Corp. That has a maximum of 100 shareholders. No, none of them can be non-residents, and that's a flow-through vehicle. The profits and losses flow through. LLCs it flows through, partnerships it flows through. The only one that doesn't have a flow-through test question is a C Corp. And then test question,
Okay.
C Corps are better for raising large sums of money. Right. So we're
All
not,
right.
by the way, we're not talking these types of questions on your exam, Joseph, are not so much about these as investment opportunities as these as potential clients of your investment advisory firm.
Okay.
All right. How many investment choices are required as per ERISA guidelines?
Three. It has to be I'll get brownie points.
Yeah, go for it. Absolutely.
It's like a money market, it's a bond fund, and something with stock. Am I right?
Yeah, you got to
Somewhat.
give three choices, and these are sometimes referred to on your exam as safe harbors.
Okay.
So, how do we protect ourselves as fiduciaries under ERISA? There's several safe harbors. One is the three choices as a minimum. The other is if we immediately vest people, we won't have to worry about being top heavy, some of things like that. So you got it. It's three unless was specified to have less. It's not actually specified to be less. It's a minimum of three. It's D.
Oh, okay, yeah.
It's not,
I honestly,
yeah.
yeah, I didn't even see D.
Yeah, now be careful.
Yeah, it's a clear case of
Well, no, I'm just going to say that's why we're doing this. So be careful. The other thing I would tell you is that if any part of an answer is incorrect, the entire answer becomes incorrect, right? So no matter how good that answer starts out as, I had a woman I was working just before we started up, we did one, and it was a great answer all the way to the end, and they put something that made no sense whatsoever, and that makes the whole answer. What type of order is filled immediately at the current market price?
market order.
Very much a test question. Limit order is your price or better. Nobody has to do business with your price or better. A stop order, the number one use of that is to stop a loss, right? So they'll say, customer's interest in stopping a loss, and then you put it out. Under the Uniform Securities Act, the definition of a broker-dealer is
B.
right on. Good job. That's very much a test question. Now, remember, I had a guy struggling. In person, this is an unnatural person, your broker, the broker-dealer. And remember, the broker-dealer has to be registered in any state in which they have a retail client. There is no demit.
Yep.
Make sure you're clear about whether you're being asked about broker dealers or investment advisors because the answers are different. Seven, an investor received an 8% return last year on her investment. If her net present value was equal to one and the CPI increased by 3%, what is her return? Boy, I love my friend Brian, but he's such a bastard sometimes. In a good way, in a good way. And I kind of joke he's trying to be as big a jerk as the jerks on the test. And so there's some information here that isn't relevant at all to answering this question.
I know that if the NPV is equal to one, And that means, mm, I know if it's greater than zero, it has a positive NPV.
Yeah, he's got you here because he's done the Jedi mind trick on you. This question has nothing to do with NPV.
Okay.
Absolutely nothing. This is very much a test question. It's so simple, it's a trick. I
Is it 8 plus 3?
It's 8 minus 3. The rate, so since the inflation rate was 3, her real return was 5. That's very much a test question. You just simply take the return minus CPI, and that
So
is the
when do you add CPI? Because I've had some questions where you
well,
add CPI.
you have a Treasury inflation protected security where the government agrees, Joseph, semi-annually to adjust the principal they owe you for the inflation rate. That's when you would add. So if inflation, we hit 9% was our high, almost 9%. If you had a tip, the bond pays semi-annually, coupon doesn't change, but the principal value would. So 9% means half of that's $45. Now the government owes you 1,045.
Okay.
Right? So that's the only time you're going to be adding on the CPI. Right? That's very much a test question. Now, one thing I suggest you do the night before, and I may have said this to you already, and or the morning of, particularly on Brian's question, is just read the question and the right answer because some of these are pretty spot on.
Yeah.
Which of the following is the definition of a market maker?
So the market maker is the OTC, and the specialist is the exchange.
Right on. Very testable. The New York Stock Exchange can best be characterized as an auction order driven market. And the specialist maintains that fair and orderly market. Over the counter markets, test question, can best be characterized as negotiated quote driven markets. And they have market makers. So very much a test question. That's C.
Okay. American,
Right on. What if it said only at expiration?
European.
Right on. Under the Uniform Securities Act, state registered investment advisors are required to maintain books and records.
Hate these questions. The 2 times I took it, I don't really remember getting any years questions like
Okay.
this, but it's still important.
Well,
It's either
remember,
A or
yeah, what I was going to tell you is that just be real careful. You might even want to annotate this exam. But one of the things we want to make sure we don't fall prey to is in this last week, if you are when you're preparing, that you don't focus too much on the draws you got previously. We want to plug gaps, certainly. We want to do remediation, but we got to prepare for whatever they throw at us. Now, this is very much usually a test question. And I like, as Brian has here, and you might want to annotate this, he has as a distractor a wrong answer that would have been a right answer to a different question. So we're going to answer this question, and then I'm going to tell you what the other wrong answer would be the right answer to.
okay. Um, well, I think it's A or B, and I think the other one has to do with what you're saying. I'm not sure if it's about USA or if it's about
Well, this,
SEC or federal.
this is so if this question said, under the Uniform Securities Act, BDs are required to maintain books and records.
Yeah.
BDs, it's B as in boy. But for an investment advisor, it is A as an apple. So the answer here is A. That's very much a test question about record retention. 2 years readily accessible means, as an examiner, I say within 2 hours, I want, or 24 hours, I want to be able to get that record. So if it would have been a BD, it's B as in boy. If this said broker dealer, says investment advisor, so it's A. There's a couple of these, by the way, where the answer is dependent on whether I'm asking you about which securities professional, the broker dealer or the investment advisor. More often than not, on your exam, because it's a 65, it's going to be about the investment advisor.
Okay.
The statute of limitations for civil penalties under the Uniform Securities Act.
So 3 years from occurrence and 2 from discovery.
Right on. Good job. Good job. The right of rescission allows for the recovery of.
A.
Right on. Good job. Good job. Acting on information from within the organization, well, Brian, is relying on what form of the efficient market hypothesis? Acting on information from within the organization.
I know what he's trying to say. It's insider information.
Yeah. So
It's I'm so bad with this, but I know is it strong?
yeah, I'm going to call Brian out on this because Brian, this is one area where I think he makes the efficient market hypothesis practice questions harder than they really are on the test.
Yeah, I picked up on it. So
Yeah.
when is it semi-strong?
Let's go through it real quickly. You could get two questions on this. Uh, Usually you're always going to get one, but maybe two even. So the efficient market hypothesis, like any hypothesis, isn't necessarily true. It's a way of explaining things. And if we believe in that efficient market hypothesis, I say, Joseph, how much do you believe in it? Are you a strong believer, a weak believer? If I believe in the weak form, let's start there. Technical analysis doesn't work, but I will concede that Warren Buffett can beat the market and has proven to do so. So weak means technical analysis doesn't work. Fundamental analysis may.
A
And
technical analysis is like is charts,
that's right on. Price patterns, information that everybody has.
and he's
Fun
saying that does not work.
does not work. Now let's move. And I said fundamental analysis may. Now we move up to semi-strong. Now every time we move up, what I said didn't work before still doesn't work. So you say, Dean, you told me you believe in the efficient market hypothesis. What form do you believe in? I say, I believe in semi-strong. I think, Joseph, the only way to beat the market is with material non-public information. So technical analysis doesn't work. Fundamental analysis doesn't work. The last form is strong. Nothing works.
So what's the difference between material non-public information and insider information?
Well, the same. Well, insider information is where Brian's at with this one, right?
Yeah,
It says on the which form and for acting on information. But yeah, within your organization means the company, and you would have access to material non-public information. Now, as I said, material, by the way, not immaterial. As I said here, I don't think Brian's questions are spot on as it reflects the efficient market hypothesis questions you are going to encounter. Now, what follows from that is that you don't believe in alpha if you believe in the strong form. Remember, alpha is excess returns. Efficient market hypothesis says there's no such thing. And then what follows from that is, are you still going to invest? The answer is yes, but you're going to invest in an index fund. You're willing to accept a market-based return if you don't think you can beat the market or anybody can beat the market, right?
yeah.
So those are your three forms. I think you're going to get the weak form, and I think you're going to perhaps even get the strong form. Weak form, technical analysis doesn't work. Strong form, nothing works. And this is an area where I just don't think Brian is spot on as he is in other areas.
So it's just weak, semi-strong, and strong, right? There's no
Yeah, the answer
semi-weak.
A, that's just bad form. There's
Yeah.
no such thing as semi-weak, right? Which quantitative measure indicates diversification? I like this one.
Negative correlation.
You are correct, right? Under modern portfolio theory isn't truth, just a way of explaining things. We would try and have in your portfolio something that has negative correlation to provide you with additional diversification. The
Yeah.
one I always use, is I think is pretty good, is if you already have ExxonMobil in your account and they add Chevron, that doesn't add under modern portfolio theory much diversification because there's almost a positive one correlation between Chevron and Exxon. If you have Exxon in your account, I add Delta, the airline company. Now it has a negative one correlation. The idea here now is that if oil goes up, good for Exxon, bad for Delta. Oil goes down, bad for Exxon, good for Delta. And this will be on your test. It'll be expressed as a number. And they'll say which provides the least diversification and you would pick the answer that has one, close to one, right? My Exxon Chevron thing. So be careful, least or most. If it's most diversification, then we're going to pick this one that has the negative, the highest negative number.
Yeah.
Very much on the test. There's positive beta, no such thing. High beta, no such thing. Standard deviation is the variance in a set of numbers, right? That too is testable. It has nothing to do with this question.
It's more to do with risk, right?
That right on. That has to do with the variance. And the higher the standard deviation, the greater the variance, and therefore the higher the risk, and the greater the return you would expect to be compensated for that.
Okay.
Right. Joe and Mary, age 52 and married, invest for retirement, and now they'd like better than average returns. According to the capital asset pricing model theory, they would.
They were like better than average, so um it's not C or D.
Right on, because you're on the right track. You're in the hunt. Exactly right.
Yeah,
The only way we're going to get better than average returns is to take.
take on risk. So
That's right.
be somewhat comfortable with risk.
I would actually go for the A answer, right? Because somewhat comfortable. What the heck does that mean? We don't want to take like wishy-washy kind of, because if we get in arbitration or something, they're going to say, well, what, So I would mark you, I would say A. Let me check the answer key, see if we got it right or wrong. Yeah, Brian said it's A. I would have gone with A. I just in general as a test taker, Joseph, don't take wishy-washy answers. If you're going to go down with a strong right answer. So somewhat comfortable, yeah, that's not going to be a good thing.
Fair enough.
According to the Prud'homme Rule, how must a trustee determine suitability for Sally and Frank, beneficiaries of a trust?
Based on the investment objective of the trust.
Yeah, right on D. Good job. A state IA is acquired by a federal IA.
So I believe it's allowed. So I don't think it's A.
You're correct. It is allowed. I mean, you can get this right with a test taking trick, redux of the ridiculous. What does the world look like if IAs can't acquire other IAs? I mean, that's just ridiculous. So A is not the answer.
B, it's saying all customer accounts must automatically be transferred. I believe they have to give consent
You're
before
absolutely right. So you want
they
to
get
start
transferred.
right on another test taking trick. You want to shy away from socially pejorative terms like must or always or never as answers, unless it's about when can I rip you off, never, when should I be acting in good faith, always. But other than that, we want to shy away from them. That's pretty harsh to say all customer accounts are must. You're absolutely right. That would be a violation because you're on the right track. You need consent to assign the investment advisory contract.
Yeah, and all clients must approve it before
Yeah,
they
I like
transfer
it.
it, isn't it?
I think what Brian's trying to get is this consent thing using different phraseology, but you're correct. It is D because we need to get client consent. So if we're transferring their funds. Now, I think Brian purposely isn't be forthcoming about transferring the account or the funds or whatever, but it says each client must approve before the transfer, and that's what it's about. It's about consent. So good job. That's what you were right on the right track of this. What authority does an administrator have over a federally covered advisor?
Anti-fraud.
Right on. No one, very testable. No one and nothing is exempt from the anti-fraud provisions of anything, Uniform Securities Act 33, 34,
Yeah.
whatever it is. A mutual fund closed at 38.50 today. Its NAV was 35.10. The fund closed the day before at 38. Was it?
Mm, okay, well, it's more than 3510, so it's got to be a premium.
Right on. It closed at 38.50. The
So then you
nation
just do
was thir-
38 minus
Yep, right on. Right on.
38 minus 35.
Now, I don't particularly, yeah, I don't particularly care about this question, Joseph, but I do think it's very testable to know the difference between closed-end funds and open-end funds as it relates to how they trade.
Yeah, the open end trades on the
Right on.
NAV and then the closed
Right.
end trades
Right.
based on supply and demand.
Very much a test issue. As an IAR, from which would you recommend to pay debt off when someone dies?
Interesting.
Yeah. So who's got to take care of expenses when someone dies?
I want to say the deceased person's checking account.
Oh God, you write a check on a dead person's account, go to jail.
So the spouses.
It's going to be the estate that's going to take care of estate expenses. They're going to handle all of that, right?
Okay.
Now, even more importantly, as the executor or executrix of the estate, as the, executor, that's an exempt transaction when I'm doing securities transactions, right? If I'm looking.
Yeah, I don't even know why I chose B because I'd never heard of that before. So
Yeah, yeah. Well, be careful. Joseph, you haven't heard before. They're good at, even my friend Brian, making up stuff you never heard of before. Those are usually called distractors. That's the technical name for wrong answers. And they're very good at making up stuff that sounds good. You're like, oh man, why did I ever read that? Why was I never there? 'Cause it's wrong,
yeah,
right? 21. Can an investment advisor rep working for an investment advisor who also has to be an agent of BD recommended to advise through the IA and trade securities through his BD?
yes, with consent and disclosure.
Right on. Right. So consent and disclosure and capacity with client, I don't need client consent to actually do the trade through the BD. I need to have made the disclosure that I will be also earning commissions through the BD, but I don't have to actually do this every time. So it's actually a yes with disclosure. Now, where you're thinking maybe client consent is when I'm acting in dual agency and I'm not an agent of the broker dealer. I'm going to do it in a different situation. So this is an answer. Your wrong answer could have been right with a different circumstance.
Yeah,
So, I'm not, as your tutor, I'm not concerned with your B answer. It's
okay.
just here, the B is not the answer because we don't need to get this consent in this scenario. A client has a life insurance policy that may not be sufficient because he won't have enough money upon death. When looking at changing the policies, you should primarily be concerned with.
Is it the needs analysis?
Right on. That's very much a test question. Very much a test question. Now, usually on your exam, this will show up as not that he already has it, that we're reviewing it, but whenever they're talking about insurance, the thing it starts with is a capital needs analysis. How
Yeah.
much insurance are you going to need, right? If an advisor is solicitor, so this is sometimes in the test referred to as a promoter. If an advisor, solicitor, promoter, placement agent, whatever you want to call this person, third party, is getting paid from advisory fees, what does he need to do?
A.
Provide all prospective clients with the ADV disclosure. Uh, that's not a bad answer, but when it's a third party, I have to have you sign a separate document that you understand. I don't work for the investment advisory firm. I'm a promoter, solicitor, and so it's unlikely I'm going to tell you not to invest with this particular investment advisor. The answer is B. So,
Yeah, it was between A and B.
yeah, yeah. So on the test, this will be a little more straightforward. It'll be two documents I give you. Joseph, here is a document that tells you about my firm as advisors, the solicitor for the advisor. I'm soliciting on behalf of them, and here's their Form ADV. We are separate entities, is the point. Then I have to tell you how I'm being compensated and whether it's going to cost you more money. So it's B. I think this is testable. I think it'll be a little more straightforward on your exam.
Okay.
Which the following was created to help parents and children save for college expenses.
Class 29.
Yeah, man, if you missed that one, I think I would flunk you on the entire test. I'd just say that's about as much of a layup as you're going to get on a, 65.
That won't exist on my test.
Yeah. What is the quick ratio for a company with $100,000 in cash equivalents, 300,000 in marketable securities, 200,000 in inventory, 50,000 accounts receivable, 50,000 in debt they'll pay off this year, and 100,000 in long-term debt? Wow.
So the quick ratio is, um, there's no inventory for quick ratio.
That's right. So let's work our way through now.
So it's 400 and then
Right
plus
on.
50.
Well, plus the 50. So there you go, 450.
And then is it is it current assets and current liabilities? Yeah, right?
Well, you tell me, we're talking about quick assets. You correctly told me the quick assets here are 450. It doesn't count the inventory. So you can either add the inventory in and say current assets and then back out the inventory, or you could just say 450. That part you're correct. It says the acid test or quick ratio, 50,000 is going to be current liabilities. So we're going to take
It's
450 and we're going to divide by 50, right? Because 100,000 is long-term debt. So I'm taking my calculator, 450,000, divide by 50, 450,000, divide by, and we get what choice that would
9.
be. Yeah, there you go. Now I kind of like this one because you correctly tossed out the inventory, and you correctly identified that the bond money isn't part of the current liabilities.
Yeah.
The bond money, the long-term debt, test question, Joseph, is part of the capitalization of this company. The capitalization, not its current liabilities. The capitalization would be the long-term debt and shareholder equity. Now, if we take the 200,000 in inventory, let's just see what current ratio would have been. I'll see if Brian offered that to us as an answer. I wouldn't be surprised if he did. 650,000 divided by 50, 13. Ah, bastard. Right? And if we would have, done the current ratio, it's D as in dog.
Yeah.
All right. When a person dies and had a property, tenants in common, who handles the estate?
Well, I mean, three of these answer choices just don't seem correct at all. I think it's B.
It's actually C. This is called domicile, the state where you resided, right? So if you resided in, called domiciled, where are you domiciled, right? So it's,
Yeah, I've never seen that before.
yeah, I don't like, here's what I think Brian is getting at in this one. I'm not worried about this particular question. What I am worried about is that you know that tenants in common there's a fractional interest and the decedent's share goes to their estate or beneficiary. That's what I worry about. And then I would want you to know that when you die, you're going to be very popular because every state is going to want you as a resident because they want to handle your estate. They want the estate tax,
And
right?
tenants in common, you have to go through probate, correct?
That's correct. The only one that would void probate for test question very would be transfer on death, right? So,
Yeah.
does an advisor solicitor need to be registered when getting advisory fees?
What does he mean by advisor solicitor? I know you said it.
No, that's okay. Brian, I personally think I'll talk to him next time I talk to him because I haven't gone through with these extra questions, and I'm sure that Brian's going to tell me that he's working on another practice test, and these are from debrief, something along those lines, questions from the front, say what you will. And I think, secondly, what he's trying to do is use some different phraseology just to kind of throw people a change up a little bit. So let me go through that again. An advisor or solicitor is somebody who's soliciting as a third party on behalf of an investment advisory firm. My firm, this was what Joseph and I did the last part of my career. I was a placement agent. So Carlyle, federally covered investment advisor, would hire Gamma Global as a broker dealer to go raise money, find investors. So I say, Joseph, this is a brochure that tells you about Gamma Global investment and investments, the advisor to the Carlyle, the investment advisory firm. This tells you about Carlyle, the investment advisory firm. I am not a Carlyle guy. It is unlikely, Joseph, that Gamma Global Investments is going to tell you not to invest with Carlyle because they're paying us. Now, Joseph, they only pay us based on the original transaction. If you invest $100 million in the Carlyle fund, they're going to pay me a commission of $2 million commission. In that situation, I don't have to be registered. I say, Joseph, you're going to pay them 2% of the assets under management. They're going to kick back to me every year 50 basis points of that. Every year, I'm going to get a continuing fee. So remember this now. This is the key pivot. If we collect fees, then we have to be registered as an investment advisor. If we're only going to
So,
get paid for the transaction, then the answer would be no. So the answer here is yes, because I'm getting paid advisory fees, right? If it said, does an advisor solicitor need to be registered when getting paid for the transaction? Then the answer is no. What that is, by the way, is a broker dealer, Joseph. This is Goldman Sachs or Morgan Stanley raising money for investment advisory firms. And they're going to be registered as broker dealers, not investment advisors. So this is a tough one. This is a tough one, right?
okay.
Are we clear where the pivot is? Is you get paid advisory fees. In
Yeah.
that situation, got to be registered as an investment advisor, right? 28, the maximum contribution to an educational covered AL is.
I know it's 2000, but per account or per child,
Yeah, good point.
I believe it's per child.
You are correct.
Okay. I didn't want to think on that one too long.
Yeah, yeah. Well, I tell a guy sometimes he's pretty smart and he curse a little bit. I said, you got to move a little quicker because you're so smart. You're talking yourself out of the right answers. The board of directors declares a 75-cent dividend. What is the first day the stock trades without the right to the dividend?
So to get a dividend, you need to be a holder by record date.
Yep, and that's not what it's asking you, but that's correct.
I know. Um, I believe it's ex-dividend.
Right on, you're correct. That's the first date in which the stock no longer trades with a dividend attached. What if I call you the day before the X and say, hey, you gotta buy it today?
Well, no, it trades T plus
And,
two.
remember, that's called selling dividends. Big, big no, no, big time test fodder. Right? No selling dividends. A customer is interested in investing for income, but is concerned about changes in long-term interest rates. As an IAR, you would inform the customer that which would be the most volatile. This is very much a test question.
Well, they all have the same maturity.
That's right. Long and low, baby. Long and low. So you went long. So now where you go next?
Low. Mm, I'm between C or D.
You are correct.
Just
So which one has the lowest coupon?
a zero.
There you go. D. There's nothing lower than no coupon, right?
Yeah.
Prior to an AR making an investment recommendation, they should be concerned with all of these taxes, except kind of a. I like this one. It's kind of fun.
Mm, something about him saying prior is
That
throwing me off.
okay, okay. Well, I told you, grammar. Is as I say, Brian is a bigger jerk as the real jerks, and in a good, loving way, right?
I
So
know alternative minimum tax is only in certain,
absolutely, I would have gone with maybe that's the way to attack the question.
very certain
Yeah,
circumstances.
well, there's going to be one of these. The way I attack this one is I look at it and I go, my Sesame Street trick. One of these things is not like the other. And the thing I don't care about, Joseph, as your investment professional, is what you pay in sales taxes. That has nothing to do with us as investment professionals, right? We are concerned with
Okay.
capital gains taxes because capital gains come from investments. We are concerned about whether you're subject to the AMT because we certainly don't want to recommend a private activity bond, for example. We're concerned about paying any inheritance tax you may encounter. Somebody dies, estate planning. So that's how I would have attacked it. The answer is actually D, right? But sales taxes, the way I attacked the question was just by saying, okay, what is the sales tax in your state? Nah. Are you subject to the EMT? Yes. I'm interested in that. Capital gains, I'm interested in. What's the value of your state? How are we going to, what's your plans when you die? So the answer there is D. Now, how do I think this will show up on the test? I don't really, this is one I take exception with a little bit. And here's where I take exception a little bit because what you are going to get tested on as it relates to this kind of a question is not so much recognizing a sales tax is different than these other taxes, more so knowing that a sales tax test question is regressive. It's regressive. What does that mean on your test? It means it impacts lower income folks more, right? And then the other thing is an income tax test question and a state tax test question are progressive. And what that means is the larger the number, the larger the tax rate, right? So in California, the top income tax bracket is 11%. Not everybody pays 11%, right? Just, rich people, I'm joking, but So I think that's how you're going to get tested on the difference between taxes, knowing sales taxes are regressive and income taxes are progressive. And
Okay.
even when it comes to income taxes, Joseph, you don't pay 11% on every dollar of income you make in the state of California, for example. You only make it on the pay it on the amount of money you're making that puts you into that rate. And I would know that's called your marginal tax rate. That's the highest rate you pay on whatever your income is, federal or state or whatever the case may be.
Okay.
Okay, your customers invest in a mutual fund that the IR recommended has been reinvesting all the capital gains and dividends. Very testable. These are called DRIPs, dividend reinvestment programs, where the mutual fund says, hey, Joseph, if you don't need the money, we'll just go ahead and buy you some more fund shares. Which is true of these distributions, very much a test question.
Are they both taxed?
Right on, right on. That's very testable. Very testable. 33. Often an investor may use PE in evaluating common stocks. This is done by,
A?
right on, very testable. You also should know that if you're a value investor, you'll be looking for a lower PE.
Yeah. Growth companies with a higher PE.
Very much a test question. A socially conscious investment company should be most concerned with,
Hmm. Each of these questions have something that I don't like in the answer choices. So
okay, well, I would think, okay, so let's just talk about the one that is coherent, right? There is one here that's coherent.
I
The
would say the rate of inflation.
No, no, no. The one that is coherent, if you are socially conscious, right? ESG, you might not want to invest in tobacco,
Uh,
alcohol, or gambling.
yeah, I was not understanding this question.
Yeah, well, no, I think, but be careful. Don't, give yourself some grace, Joseph, because I think Brian is purposely trying not to be, as forthcoming.
Straightforward, yeah.
Yeah. So, there's what we call ESG investments, right? And ESG investments would be where you want to make investments that are friendly to the environment, have good social benefits, and have good corporate governance. It's kind of been overdone. In fact, the SEC came after mutual funds were labeling themselves as socially conscious when they weren't doing anything socially conscious. They just put it on there as a marketing kind of a gimmick. But yeah, I've had investors who say, "Hey, Dean, I don't want to be invested in things that I don't really care for." You know, I've had
Yeah,
who say, "Dean, hey, let's get some tobacco, alcohol, and gambling, man." Whatever the case, there is a guy who has a vice fund where it buys these things. So my thing was the price of automobiles. Here's what I thought you were saying. Socially conscious. Yeah, I guess I could say you should be buying, hybrids instead of a pickup truck, maybe energy cost of food. But yeah, I'm with you. I don't think it's Ryan's best, but it's there. Monetary policy, very testable.
the Federal Reserve,
Right on. Who controls fiscal policy?
the government.
What is the missions of the Fed? What is their mission in conducting monetary policy?
Mm,
They have two. The one we care most about is price stability, price equilibrium, and full employment. Price stability, meaning they don't want inflation, too much money chasing too few goods. They don't want deflation, too many goods and not enough money. They want to have just the right amount of money, the money supply. And how do they conduct monetary policy? Test
by
question.
buying by
There you go.
buying
Right
government
on.
securities.
Right on. Or selling, depending on what they're up
Or
to.
buying or selling, yeah. Expanding or
That's called open market operations of the Fed. Okay, now when it comes to fiscal policy, that's government spending and taxation. My German friends have recently had two calendar quarters of declining GDP. Test question. The German economy has experienced two calendar quarters of declining GDP.
The recession.
Right on.
And
They
then four is a depression.
six.
Six, my apologies.
No, no apology necessary. The
I haven't
German
seen that. Yeah.
the German government has decided to spend $1 trillion, 500 billion on defense, $500 billion in infrastructure to stimulate their economy. Test question, what kind of economics is that? Who is the economist who said that when the business cycle is suffering from a lack of demand, that the government might want to help out by stimulating the economy through government spending? Test
Is that
question.
is that
Well,
Keynesian?
there you
Or is
go.
that yeah.
Demand side economics, and the founder of that is Lord John Maynard Keynes, right? And he said, with the government, and then when the economy gets rolling in, we step on the brake, called, government taxation. That's called demand side. There's another school of economics that says that what the government really should be doing is trying to create an environment for individuals to be doing economic activity because they're better decision makers than the government. Government spending and taxation in their world is a negative, not a positive, and that's called supply side economics, right? That's the antithesis to demand side. All right. A teacher recently hired by his nearest school would have which of the retirement plans available from the school district? That's very much a test question.
403B.
Right on. Very much a test question.
So what's the 457? That's the two I
Four,
was between.
yeah, 457 is for a policeman, fireman, other public employees. Other public employees, sometimes some nonprofits, but primarily I would be thinking here deferred compensation for policemen and firefighters, those kind of guys.
These people, like these teachers, they're not public
Uh,
employees or
no, they get no. This is above and beyond what they're already getting in their defined benefit plan. This is something they can fund if offered to them, tax sheltered annuities. The other one who gets this is employees of 501(c)s. Think here nonprofit hospitals. And what that 403(b) is a employee a retirement plan through their employer, right? So
yeah.
3B. Customer interested in adding an emerging market to their portfolio should be most concerned about which risk.
Political.
Yeah, right on. Right on. I'll give the answers that's the best answer. A customer would like a fixed income portfolio. As an IIR, you would want to recommend
It's C.
yeah, good job. You can't ever, don't ever tell me tax free unless I tells you somebody's in a high tax bracket. Don't be bringing stuff into questions that isn't there.
That's what I was thinking A, but there wasn't
Yeah,
enough
be
in the
careful. Yeah,
question.
that's exactly right. That's how you should do on the test, right? If they don't say anything about the person being in an uncomfortably high tax bracket or something like that, then it's not right. A customer would like to start a business that has controlled liability and claim it on his individual tax return. Which would you recommend?
Controlled liability, does he mean that that person controls the liability.
Yeah,
And
that you actually
they're
know what your liability is. It's a number that's knowable.
okay. I would say sole proprietorship.
No, sole proprietorship, you got unlimited liability. Absolutely not. You don't have controlled liability. If you have a mowing service as a
Okay.
sole proprietor and a rock hits some kid in the head, there's going to be some personal injury attorney. Has your kid been hit by a rock?
Yeah,
Oh,
no, the controlled liability is what was throwing me off.
yeah,
Is
no, I'm
it
with you. I think Brian's intentionally trying to use this language to get us comfortable with it, but it's controlled liability means limited liability.
so an LLC?
Yeah, and that's why he didn't want to say that, right? Because that would give the question away.
Yep.
Yeah, so that's why he didn't say limited liability. But once you know that, you should know it's not A, B. There's no such thing as D.
Yeah, I knew that.
So, as a common stockholder, which right do you have?
A vote for directors.
Right on, right on. According to NASA, what is not considered custody?
What is unable to appropriate client
Yeah, I
funds? What does
like
that
that.
mean?
I like it again. Brian's purposely, I think, using this weird language just to,
He's really going
yeah, yeah,
overkill.
yeah. I used to say, Joseph, as a practitioner, that I can't steal what I can't touch. I don't have access to your funds, your monies, or securities. They're at Schwab, the broker dealer.
So is it B?
It's C, unable to appropriate the client funds. I don't have access to them. A, I have access to your funds. B, I have access to your funds. And D, I have access to your funds.
What does indirect possession mean then?
Indirect possession would mean I don't actually have them myself, but I have them at like a custodian that will do what I tell them to do. In other
Okay.
words, I call them and say, "Hey, transfer and ship this 1,000 shares to me." Right. And again, I think Brian, it'd be interesting. I'm going to talk to him backstage about these questions, but I think he's intentionally dialing these up.
Yeah, I
And
bet.
like I said, I think they're coming from wherever they're coming from. A grandfather would like to leave assets to his grandson, but would like to have access to the funds while he's alive. As an IRA, which type of account would you recommend? Now, this one, Brian swears to me, people tell him they've seen it. I have not had anybody tell me they've seen this yet. But this is a Totten trust, which is just another form of a living trust, right? So, I wouldn't worry about it, but you can tell me if you see this, you can say something.
I
Your
was going to say that anyway.
Yeah, your customer has a fixed annuity with a 10-year period certain, so somebody's getting paid, and dies after the first year, having received 550 a month. What would the beneficiary receive? I like this one.
It's the death benefit according to the contract.
No, it's going to be B. That's the whole point of this is B as in boy. Somebody will get paid. Now, if you chose life only, that would have been D, right? Life only would give you the largest monthly check, but as soon as you die, the checks stop, right? I think you're more likely to see on your test. The question I just asked you is which annuitization choice, when you annuitize, would give the customer the largest monthly check? And you would say life only. Now, the problem with life only is that if you die, the same question said life only, then the answer is D as in dog. But since he said 10-year period certain, 10 years, that's what B is. What about joint with life with joint survivor? That would be we're going to pay you for your life and then whoever you tell us for the rest of their life. Think you're a husband and wife,
Yeah.
right? According to the efficient market hypothesis, both public and private information known about a company is considered to be so both public and private. Private means material non-public information is known, and therefore cannot be profited from it.
It's C.
It's D. Now, again, I'm with you. I don't think Brian is as spot on. But the reason it's not C is because when we're semi-strong, you think private information can beat the market, right? Here it says both private and public is known. That means there's no material non-public information to be profited from. So I think the grammar is challenging, but for our purposes, test purpose, strong, nothing works. Because all information to be known can be known, both public and private, therefore strong. Now, as I told you, I think you're going to either get strong or weak, and I told you it's going to be more linear than Brian. It's going to be a little more straightforward.
Okay.
45. A 55-year-old has just retired and has $100,000 to invest to go back to college, or perhaps to use for his son who's just finished high school and wants to go to medical school. He should open,
529.
right on, because he's going to have control of those assets. A company sells $50,000 as a product. This would be reported on its
The income statement.
good job, right? That's the top line of an income statement, revenue. An investor purchased 5% par bond for 950. The bond matures after 1 year. What is the total return? I kind of like that.
I don't.
Okay, well, let's just talk about it because it's testable. It's called a performance measure. The only two ways you're going to make money in an investment is the income stream, $50, and or price appreciation, $50. So what it pays you and then what you get in that. So we made $100 here, right? You see where I got the $100? I made $50 in annual interest, 5% times 1,000.
Yeah.
I made another $50 from the difference between 950 to 1,000. So I made $100.
Do 100 over 1,000.
No, over what you paid. Because
Oh,
remember,
950.
your investment was 950. So now we're going to take what we made, $100, $50 in income and $50 in price appreciation. We're going to divide by 950, and I get 10.5%.
Yeah.
Right? That's very much a test question. That's called total return. So the thing you could test on 65 are called performance measures. Total return is a performance measure you get tested on. You had one earlier that you we talked about. Another performance measure was your return after inflation. Remember, we had the 8% return and the 3% inflation. Then we had to come
Yeah.
up with 5%. So that's very much a test question. Those are called performance measures. Most of the math, not a lot of math, as you know, having gone into the Slay the Dragon, most of the math, not a lot of it, but it comes from two parts of the exam. Analytical methods, you did very well in analytical methods. That includes balance sheets. You correctly told me the quick or acid test ratio. That stuff is in what we call analytical methods. These numbers are in what we call performance measures. Current yield, total return, annualized return, tax-free yield, tax-free or tax equivalent yield, two, three, four questions on performance measures. We've encountered two thus far. If the account holder dies, which of the long accounts would avoid probate? I like this one. This is a good one.
Well, I know that tenants in common have to go through probate,
That's
which
right. I love it. So
all of
eliminate
them
two.
eliminate all of them.
Yeah. That'd be fun to point out to Brian. I know he probably doesn't realize he made a boo-boo there where you could
Yeah,
eliminate two and get his question correct. Good job.
because I
Absolutely.
don't really know anything about four.
Well, yeah, four is just a variable annuity holder dies during you haven't actually annuitized. That would not be part of the probate, but the others would. The big one is the one and the three, which is the big ones. Right.
That's the three is that's the Taunton thing,
Transfer.
right?
That's right. That's right. If long-term yields are higher than short-term yields, while interest rates rise, the yield curve would most likely,
Inverted.
well, it would get steeper. It's already
Oh,
inverted, right? Because it says long-term yields are higher than short-term yields. That actually is a normal yield curve. So now it says, while interest rates rise, so it didn't ask you about inverted. Invert would be when short-term yields are higher than long-term yields. So let's be clear on this one because it's testable. The 49 is a normal yield curve. If long-term yields are higher than short terms, that's a normal yield curve. It's not inverted. And now the Fed starts to rise interest rates, so they have control over short-term rates. We would imagine that the long-term yields are going to increase when interest rates rise. Now, I don't like this question. The answer that Brian is looking for here is A. I don't like it because I think, Joseph, it's more likely you're going to get the answer that you gave is going to be correct on the test. But the question would say if short term yields are higher than long term yields, the yield curve could best be described as, and you would say
yeah.
inverted. And then the test question would be an inverted yield curve. Test question number two is a negative leading economic indicator. Right. So once that yield curve is inverted, woo, watch out. Right. Now the Fed didn't take a victory lap, but when they were testifying to Congress, one of the congressmen tried to throw Jerome Powell a layup and say, you should be pretty proud that you were able to raise interest rates that high that fast and not put the economy into a recession. And, Jerome Powell was asked, would he invert the yield curve and raise short-term rates so high that he would put the economy in a recession? And he said, well, I'm trying to dent demand, and we had too much demand, remember? We had too much inflation. One other point, if the yield curve is flat, that would mean there's a lot of uncertainty in the economy. Now, you probably have heard me say this 100 times, Joseph, watching my videos, but if anybody ever asks you about economics, finance, or investments, and you want to sound smart, you should say it has a lot to do
Common has to
with
do with
interest
interest
rates.
rates.
And they say, what about them? You say they
They
fluctuate.
fluctuate.
And then if you want to sound smart, say, keep an eye on the yield curve. Well, I'm watching the Fed, seeing what they're doing with short-term interest rates. So there you
I
go.
think that's in every single one of your videos.
I because it's so good.
Mm.
Sally owns 100 shares of XY. I wait until somebody's actually really at a cocktail party, and
And they say it.
yeah, hey, it would stand. It would stand. I tell you, it would work. Somebody would think you know what you're talking about. Sally owns 100 shares of XYZ. She fears a near-term correction, but overall, she remains bullish. So it sounds like it's a hedge situation. To profit from this situation. Now, this is Brian being a jerk because he says to profit from this situation. Now, the answer is usually going to be buying a put, but buying a put doesn't mean you profit. Buying a put is buying insurance, and that's going to cost you money out of pocket. So here it says to profit. So that means we're going to have to do C or D.
I drew up a little cheat sheet over here and I put the
Yeah.
options.
Okay. All right. Let's see what you got. Now, remember, the key point is profit. It's not protect. If it said protect, the answer would be B, as in boy.
Yeah. Would we sell a call?
Absolutely. We would generate the additional income by selling that call. That's called a covered call. Covered call. Good job. Excellent. Your customer places an order to sell 100 shares at 43.50 stop. Using the trade sequence below, what price is the order executed? Be careful. Two separate events. So if I would have asked you when did the order become live, get triggered or elected, that's a different answer than where was the order executed. So now we're going to go through the sequence of trades. We're watching the tape go by, CNBC. And please note, we placed our sell stop below the market, is what we have to do. Does anything happen at 43.78? No. Anything happen at 43.65? No. Anything happen at 43.55? No. 45, 43.50. Ding, 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 ding. It's now a live market order. Now, don't tell me 43.50. I can't tell how many clients I've had call me, that's my trade. I go, that is not your trade. That is the trade that turned your suspended contingent order into a live market order. Now you want immediate execution at the best available price. 43.50 becomes live.
It would be 43, 45.
No, 43.57. It's now live order after 43.50. Let me get out my annotation tool. Boom. Now it's become live, and we want immediate execution, best available price. So the answer is C. Now, you are maybe misreading this. If this said 43 stop limit, now it would become a live limit order, not a live market order, and you would have been correct, right? You can either turn it into a market order or you can turn it into a limit order. This order turns into a market order.
Yeah.
All right. So, by the way, I tell you, this is one of the things I think, Joseph, makes the 65 so challenging because there's so much stuff on it, and people are incredulous when I think it's harder than a seven. And the reason I think it's harder than a seven is because you get a question like this, and then you got to decide the option question you got right. Yeah. Oh, you got to decide, oh, how much time am I going to spend on types of orders? We've only got one question so far on type of orders, and you could spend hours on this stuff. Now, the reason I think 65 is harder is because seven, people do spend hours on it. And they get more questions on it, right? So it's just so hard to decide where to spend your time on the 65. I mean, really do. This is testable. I mean, here we are, question 51. We've seen one like this.
Yeah.
One reason an investor would not use the internal rate of return to analyze a potential investment in common stock is
There's no maturity date.
yeah, good job. Excellent. That was a tough one, man. If I weren't charging
Yeah.
got that right, I'd give you an extra credit point because that's tough.
Yeah, I don't. I was thinking about that one for a while.
Yeah, that's okay. I mean, I don't mind. I had a guy I was working with earlier today, the same thing, taking a 65, and we were doing a shared screen practice test like this, and I was telling him to squeeze the trigger a little quicker because he was taking a long time and not getting it correct. If you're taking your time and then you squeeze the trigger and it's correct, well, then that's fine. And the other reason I was kind of challenging him to go a little quicker is because he was actually getting the right answer and then talking himself out of it. And I'd
Yeah.
say, okay, that's not productive, right? So, I wouldn't have felt bad as your tutor, by the way. A good get. It's a good get. But I wouldn't have felt bad if you wanted to sign that one to the universe and make it up elsewhere. But good get. Investor placed 5,000 in a growth fund 10 years ago. The account is now worth 10. So this is on you as a test taker to recognize. I didn't tell you the guy has $4,857, and now he has, $11,048. We should, as a test taker, recognize the symmetry in this question. We should recognize here that we have a double, right? We had a present value of 5,000. We have a future value of 10,000. What is the annual return? So we should be able to recognize what cocktail party trick can we use here.
Is this the rule of 72?
Yeah, how long, what rate we need to double money, right? And so if we're going to double money in 10 years, we're going to take the rule of 72, we're going to take 72, we're going to divide by 10, and we're going to find out that the answer is
7.2.
right on. Very much a test question. Now, by the way, what's the fancy name for that 7.2? The internal rate of return. The internal rate of return is the bridge between the present value of 5,000 to the future value of 10.
Yeah.
That's the internal rate of return that will turn 10 into 10. Now, if the 10 was missing, I'm not going to ask you to do this, but if the 10 was missing, please note to calculate that present value, we need to know present value 5,000. We need to know the
The
number of
rate of return.
compounding periods, 10 years and 7.2. That's the input, right? If
Yeah.
we were asked to calculate present value, we're not going to ask you to do that, but if that $5,000 was missing and I was asking you to solve for it, it's not can you solve for it, is do you know what would be required? To solve for present value, we need the future value, 10,000. We need the number of compounding periods, 10, and we know the rate of return. And then we could, figure out that the present value is 5. Which would you find on the customer's balance sheet? I like this one.
Hmm. Well, a diamond ring is an asset.
There you go. Boom. You got it.
I was between that and D and A because A, like,
Dividends, net dividends received. Oh, you could make a good argument on dividends received because it would show
because
up as,
that falls under net worth,
yeah,
right?
well, it would fall under cash. I mean, dividends received, assuming I
Oh,
haven't.
that's true.
Yeah, but I think you'd have to, it's the diamond ring. I think the reason Brian put this on there is there's a question that shows up a lot about a sofa. And again, a sofa, like a diamond ring, is personal property and it's an asset. What would be a common item to see on a Social Security statement?
Ooh, I don't know. Is it D?
It's actually C, but who cares? I don't think you're going to see it. It's C as in Charlie. The only test question really is to understand. Well, I'll take that back. I was going to say there's nothing really about Social Security. What does show up on your test, Joseph, is what's called IRMA. IRMA. And that is the surcharge on Medicare for people with a high income tax and higher incomes. So I would know about IRMA. It's in, what is it? The income adjusted, it stands for whatever it stands for. That's on there. And then I would know that that Social Security check is a key component to a lot of our clients' income in retirement, right? They're typically going to have Social Security. Maybe they have a pension. Maybe they have an annuity. What are they going to have in terms of income at retirement? Which of the line best describes a hedge fund?
Is it B?
It is A. Hedge funds are offered as private placements. They're only for in not generally offered to the public. They're offered to accredited investors. So the answer is A. Uh, well, they could have long and short with high amounts of risk. That's true. But the question says best described. Some don't have long and short. Some are just short. Some are just long. Some are, macro. So it's just A is better than B. It's not that B is not wrong. It's just not the best answer. A customer is looking to invest in income stock. They're looking for 6% return. So her children have enough money to go to college. According to the dividend discount model, to determine the best price to pay in order to achieve her goal, she would need to determine, kind of interesting.
Is it A?
Yeah, A is a really good miss. Divide the annual dividend into the required rate of return, which equals present value. The reason that's not true is because that wouldn't give us the present value. The present value would be how we determine whether we want to make the investment based on that, whether there's net present value or not. So not a bad miss. It's actually D as in dog. I don't think I would worry about this at all. Let me tell you what is the test question about discounted cash flow. The test question about the dividend discount model is it's DCF as applied to a stock. So we have lots of valuation techniques for stocks. We have PE ratio is a valuation technique for stocks. Price to book is a valuation technique for stocks. And dividend discount model is the discounted cash flow as applied to a stock with a dividend test question. We cannot apply the dividend discount model to a stock with no dividend. Secondly, we have two versions of this. We have one version where we assume the dividend isn't going to change. Think here preferred stock. The annual dividend is going to be the same over and over and over again. That's dividend discount model. We also have what's called the dividend growth model, which assumes that the dividend may grow. So there's a couple test questions there. You can apply the dividend growth model to a preferred stock, right? Because the dividend is fixed and not going up. Second test question. What would justify a higher valuation? Because that's what DCF is. It's a valuation technique. When applied to a stock, it's either called dividend discount model or dividend growth model. And test question number two is if we're doing analysis, fundamental analysis, using the dividend growth model, would we get a higher or lower valuation we'd be willing to pay for the stock?
Can you repeat that again? Sorry.
Now, what would justify me paying a higher valuation for a stock? If I apply a dividend discount model, where I assume the dividends on the common stock are going to remain constant, not change, or the dividend growth model.
The first one.
Gotcha. It's a growth model would justify a higher valuation. I'd be willing to pay
Okay.
more for a stock that has a dividend that grows. Right. For example, Bank of America pays 21 cents a quarter. Now it's going to pay 24 cents a quarter, right? Now, if I assume that it might go to 27 and someday go to 30 and then go to 33, I'd willing to pay a higher money, a higher number.
Right.
Okay, the sale of a policy owner's existing life insurance to a third party for more than its cash surrender value, but less than its net death benefit is this used to show up on the test quite a bit. I haven't had anybody in a long time tell me they've seen it.
Yeah, I haven't seen this ever.
It's called a viatical settlement.
Yeah, I'd never seen that.
Yeah, well, there you go. So, Brian and I are simpatico. I consider him to be a brother from another mother, but there are some things we disagree about. I told you the Totten Trust, I haven't had anybody tell me they've seen that, and viatical settlements. And then every once in a while, somebody will tell me it's not like, oh God, now I got to tell Brian somebody saw it. An alternative trading system where orders can be placed anonymously. There's the key word. So the identity of the entity placing the order, if I'm an institutional investor, this sounds pretty bueno. Along with the volume and price, is unknown to the general investing public, is generally referred to
A dark pool.
right on. Keyword there is anonymous. I would probably add to this, it's an institutional kind of a thing. It's not for retail investors. Which of the following can be placed into an IRA?
Mm, Is it a business property?
Right on. Good job. I like that. I would have used the Sesame Street trick on that one. One of these things is not like the other. Closed-end companies are attractive because, yeah, I'm not a big fan of this one.
Well, they can trade at a premium or a discount.
Yeah, I'm with you. So what would be a better? Would you rather pay a premium or a discount? What's more attractive to you?
A discount.
Yeah. I think that Brian here, you should have known it's not C, and you should have known it's not D. And then what I would tell you is when you get two opposites, it's usually one of the opposites, right? So
Okay.
if I have two, then you look at it and just rephrase it again, right? So you got to the A or B, and then you just got to decide which one of those is better, right? A couple owned their home for 25 years. They paid 150. After 25 years, they sold it for 750. What is their capital gain?
Is it 600?
It's actually, yeah, it's not 600 because you get a 250 off that, right? In terms of your selling price. So 250 is exempt of that capital gain. You paid 150, you sold it for 750, and so it's going to be the answer is going to be I'm not sure how Brian's getting this 62. I don't think it's going to be testable with your 250 exempt. I'm just trying to see how he's getting to what he's saying. The answer, their taxable gain is, oh, they're married and filing jointly. There we go. If you're married and filing jointly, it's 500,000. So you're going to take 500 against the 750. And so that means it's actually going to be 250. And so it's 100,000. This is another one, Joseph, I've never had anybody tell me they've seen on their actual exam. All right. What qualified plan is available to an employee of a tax exempt company? This is the second time you've had this question, and it is very testable. 501(c)s, think Sisters of Mercy, the hospital, nonprofit hospital.
403B?
Right on, very testable. What is not a risk of owning T-bills? What is not a risk of owning T-bills?
Liquidity.
Yeah, right on. That's the most liquid market there is. Customer owns an 8% convertible bond with a conversion price of 40. The bond's currently trading at 1100. What is parity price of the stock? Again, this is another one like that sell stop order. Is it testable? The answer is yes. Here we are at question 65. I'm not quite sure how much time you'd want to spend on convertibles as it relates to passing your 65, but hey, you know, parity means equal. So what this question is asking in plain English is if you buy this bond for 1100 and you convert, what would you be paying for the stock? Well, you are going down a very wrong path, my friend. The 8%
50.
has nothing to do with answering this question. That 8% has nothing to do with answering this question. When given the conversion price, very important, you need the conversion ratio. You have to know how many shares you can convert this into. Nope, 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 nope. Slow down, my friend.
Oh, I forgot you can see my calculator.
Yeah. No, that's okay though. I'm impressed. I don't even know how to do that on my computer. I probably should. I keep telling myself I'm going to sit down and learn how to use my computer better. But anyways, what we first got to do is say, okay, the $50 was based on par. So here you go. We're going to take our 1,000 par. We're going to divide by 50. So 1,000 divided by 50. And now we know that we can get 20 shares of the common. If we choose to, we can give this bond to XYZ. They'll give us 20 shares of the common. Right now, the bond is trading at 1100, so let's clear our calculator. And if we can turn this into 20 shares, divide by 20, we would be paying equal to $55 a share. Parity means equal. So buying this bond at 1100 is equal to paying $55 for the stock. Is that a good deal or a bad deal? We don't know that because we don't know what the stock's trading at. But we do know that that's what that's equal to. Now, is your tutor, this is kind of like that sell stop. Eh, I don't know. Do I think you should spend the next week learning sell stops and parity calculations? I do not. Do I think you might get a question on it? I do. And then do you want to do it or you want to assign it to the universe? That's the challenge on 65. I think that's one of the major challenges on 65 is there's these questions that, are there, but they're not, it's not like there's a bunch of them, right? So it's hard to decide. All right. If an IIR is a federally covered advisor and has an office in state X, so we have to register in state X. I don't know if that's what's going to ask us, but if you're an investment advisor rep of a federally covered advisor, you have to register in any state in which you have a place of business. You send mail to 100 clients in state Y and Z. Aren't you glad you're a federally covered advisor? I just told you federally covered advisors only have to be registered in a state in which they
Yeah.
have a place of business. Boom. That's very much it. When you're doing these questions, man, the minute you're fairly covered, you go, okay, wow, life is good. All that other crap is just if you're state covered,
Yeah.
right? An investor would like to take advantage of dollar cost averaging. Very testable. What makes it work? Fixed dollars invested regularly. $100, $100, $100. What's the end result? You're going to have a lower average cost on the underlying shares. It doesn't guarantee a profit. So we're going to have to figure if what is the average price? And so average price is, average cost is. By the way, I'm lazy. I just told you you're going to end up with a lower average cost, 692, than the average share price, 750. Just knowing the relationship of the numbers, I didn't have to do the math because I know what makes it work. Fixed dollars invested regularly. I know that I'm going to end up with a lower average cost than the average share price. You're doing exactly what you should be doing, which is buying more shares when they're low and less shares when they're high. Now let's see what the math is. So you got your calculator, 10 plus 5 plus 750. There we go. Divide by 3. Boom. And Dean was correct. Roman numeral 2. Okay, now we take how many shares did we get at 100? We got 10 shares, and then we got 20 shares, and then we got 100 divided by 750, however many shares that is, and we divide, and we get 692. Right? No, you're doing the wrong math on that average cost. 100 divided by 10 is 10 shares, right?
Yeah. Then 100 divided by 5.
20 shares, okay? And then 100 by 750 is 13.3 shares. So we got 10, 20, we got 33.3. So 300 divided by 33.3.
You said 33?
Yeah, no, go hit the equal button,
Oh,
right? We got to figure out how many shares we had. So that's how many shares we got, right? We had 10 plus 20 plus 13.3, 43.3. And now we divide that by our investment.
by 300.
300 divided by 43.3. That was our total investment. Boom.
Yeah.
Yeah, now remember though, I didn't even do the math. I told you what's testable. What makes it work? Fixed dollars invested regularly. So we should recognize this is dollar cost averaging. That's testable. And it's a great way to get where you're going financially because you're doing exactly what you should be doing is buying less shares at 10, more shares at 5. What's the end result? Testable. You'll have a lower average cost than the underlying shares. That's how Dean answered it. I just knew it had to be an average cost lower and then doesn't guarantee a profit. Which of the following best describes a buy and hold long-term investment?
Passive management.
Very much a test question. And why is that a good thing? Very testable because you have lower cost structure and more tax efficiency. A lower cost structure. What comes with passive investments? The advantage is a lower cost structure and tax efficiency. Oil and gas investments are an example of
These are commodities, right?
no alternative investments. These would be partnerships. Partnerships. Oil and gas, equipment leasing. And why would you want to have these in your portfolio? Any alternative investment?
Diversification.
Yeah, but you want to sound fancy. You're right. But what's the fancy word for that? Correlation. Different correlation. Right? Different correlation provides Joseph diversification. Right? So he's got to go one step a little further on it. All right, 50, 110 years. So again, we should recognize the symmetry. 50,000 is the present value, 100,000 is the future value. 10 years, so we need to double our money in 10 years. The rule of 72 says we take 72, divide, there you go, divide by the number of years or divide by the return, and it tells us how long to double money. If an auditor found a company to be involved in creative accounting, what language do they need to write on the letter?
Qualified?
Right on. Good job. Good get. Future contracts include all the following except
Is it exchange traded?
No, they are exchange traded. What you can't know is the cash price when the contract's issued, right? The cash price is going to the spot market, and that's going to be changing all the time. So they'll tell you if they're exchange traded, they'll tell you the price upon delivery, the strike price, if you will, and when would you receive the goods. The cash price, that I don't care about this question as your tutor, but I would know the cash price is called the spot market. The spot market. But I say, what's the spot on the peso? I'm just asking, what is the present price?
Okay.
Somebody, a closed-end fund has 11 million in assets, a million in liabilities, million shares outstanding, and is selling for 8.
Is it one? Oh, is it 1 and 3?
We got you. The NAV would be the assets, 11 million minus the million. 10 million is net assets. We take the 10 million and we divide by the 10 and we find out the NAV is $10, Roman numeral 2.
So it has nothing to do with the outstanding shares.
Well, no, it does. We took a 10 million divided by a million. We took the 11 million in assets, we
Oh,
minus the million liabilities, we divided by the million. 10 million divided by 1 million is the answer to the NAV, 2. It's selling for 8. So if the NAV is 10 and it's selling for 8, the discount is 2. It's 2 and 4.
so it's 11 minus 1,
Yeah, yeah,
which
11
equals
minus
10.
1. Yep.
And
Divide
then
by,
I would do,
yeah, well, equals 10 million. You're right. And then divide by the number of shares outstanding. So the net always means subtract net. Net assets. Net assets means after subtracting liabilities, right? So 11 million is the assets. That's the securities in the portfolio, right? That's the portfolio. We owe a million, so there's $10 million in net assets. We divide by the million, that's 10. It's selling at 8. I don't think this is really high risk, but boy, you are going to get tormented on the difference between closed and open end, knowing that open end funds would never be trading at a discount to NAV. Which of all constitutes custody, so you can steal their stuff.
is it paying rent for a client?
Yeah, you'd be silly to let me use your checking account to pay your rent while you're out of the country. Because how do you know I'm paying the rent? Well, I might pay the rent, and I might. I told you, Joseph, I had a pretty high bar bill there, and the young lady was, I think she was impressed. I mean, young is a relative term, and anyways, it was funny. We were chatting it up after the thing, and she told me she's 36. I go, wow. She goes, I said, man, so the age difference is as bad as I thought. And she goes, well, what do you mean? I go, well, gee, I thought you were like mid 20s or something. And obviously, an old guy like me isn't going to be going out with a, 20-year-old. And anyways, then she said, I had left my card at the bar and she came and gave me when I was in the dinner. And she goes, hey, did you do that on purpose? I guess she
I
said,
bet you did.
I didn't. I said, hey, I wish I was that clever. I'm not that clever. I said, but hey, did you go shopping? Did you take the card out for a spin? All right. What is the biggest risk in investing a zero coupon bond maturing in 10 years?
Is it inflation risk?
Yeah, it is. It is. That's kind of a funky question, but yeah. Which of long is the highest rating of a junk bond? Ooh, Brian's such a jerk. Yeah, that would be really easy to miss, right? Because a triple B is investment grade, right?
Yeah.
If assets remain the same and liabilities decrease, what happens? So my assets remain the same and I pay off some of my debt. I think with these questions, I always think about your personal situation. It's easy, right? So let's say you have $1 million in assets, you have 200,000 liabilities. So that's 800,000. Now you pay off $100,000 in your liability, you still have a million minus 100. So what happened to your net worth?
Um, it went down.
Goes up, right? You pay off your liabilities, but you didn't you have the same level of assets. There's, your equity goes up. It's B as in boy. Now be careful. Brian isn't asking about what happens to working capital when you pay your bills. That would be no effect, right? So asking you about working capital is different than asking about shareholder equity. That was a tough one. I wouldn't, be worried about that as your tutor. According to Keynes, Lord John Maynard Keynes, we talked about him earlier tonight. What rises when aggregate demand goes down? So if demand goes down, what happens? That's not bueno. Oh, think about the depression. 6 calendar quarters of declining GDP. And what happened in the depression? What went up?
Unemployment
Yeah,
or
right on.
interest? Yeah.
Yeah, right. It's unemployment, right? We're not selling stuff. We have a lack of demand. So, what did Mr. Keynes say the government should do to? By the way, prior to Lord John Maynard Keynes, classical economists, and some of them are still around, would say, in the long run, it will fix itself. Mr. Keynes said, in the long run, we're dead. So we should do something now. Remember what he said we should do? Is step on the accelerator called government spending to stimulate demand. The government should step in and create that demand through infrastructure and defense spending and all that kind of stuff we were talking about with our German friends, right? In the business cycle, what's in between the recession and the peak? So, things between recession and the peak.
Expansion.
Yeah, right on. Do you know what stagflation is?
I haven't seen it. I saw it on the SIE a little bit, but I haven't
Yeah,
seen it much on the
stagflation is kind of a
65.
weird. Yeah, it's weird. Weird. Stagflation, we would usually expect full employment in a high inflationary environment. And so stagflation is high inflation with rising unemployment. So that's kind of a weird thing. That's not bueno. The primary purpose of an 8K is to very much a test question, sources of financial information.
Mm, is it promptly?
No, it's 4 days, and this is a material current event. When Silicon Valley Bank went under, I thought this was kind of silly because they filed the 8K saying that they had lost $2 billion in their bond portfolio and that Goldman Sachs was going to go find them some money. And they filed it before they had to. And I thought, man, I would have hired Goldman Sachs, had them raise some money for me, and then filed the damn thing. Say, hey, we have a hole, but we're working on it. And, oh well, but it's 4 days. It's a material current event at a public company. Do you know what a 10K is?
It's the annual report.
Good job. Do you know what a 10Q is?
It's quarterly.
Do you know what a 13F is?
That's for privates, right?
Well,
Or
no, 13F. That's for institutional investors, very testable, have $100 million in assets under management. They have to file that every quarter in 45 days. 13D is 5% or more. So that'll be an answer set on the test. An investment company that invests in equity and bonds, primary from third world countries, can best be described as
I want to say emerging markets, but I think that's for developed
No,
countries.
no, emerging markets. You're correct. It's D as in dog. The international fund would include like developed countries like Europe and not include the US. B would be international, but not the US, and global would include the US. So you got it right. It's
Okay.
D. Which one best describes bond duration? That's very much a test question.
Is it price sensitivity to interest rates?
Right on, right on. And then how would we go through an answer set and decide which one has the most sensitivity? Remember what we said?
High, low,
Long
or
and low, baby. Long.
long, low?
We go longest maturity and then the lowest coupon. Right
I'm gonna
on.
write that down.
Long and low. You go long and low. Now just be careful on the change up. Every once in a while, somebody will say, Dean, I missed it, and I went long and low, and I said, yeah, read the question again because it said least sensitive, right? And then you got to go do it ass backwards, right?
All right.
83 quadros are very testable. That's a very much a test question. That's a qualified domestic relations order. It's from a court telling the custodian to distribute a portion of the retirement account to that ex-spouse.
Is it that it can't be rolled over into an IRA?
No, it can't actually. It's B. They don't have to pay the 10% penalty as long as they do roll it over, right? So it's B. On a balance sheet, retained earnings are treated as,
Owner's equity?
good job, excellent. U.S. companies do business with companies overseas. The U.S. dollar strengthens. What area is least affected? Yeah, that's kind of a funky one. I don't really care for Brian's phraseology here, but what I should know is if the U.S. dollar strengthens, U.S. imports are going to increase and U.S. exports are going to decrease. This will increase the trade deficit. I'm a U.S. importer, so I like a strong dollar because I like to buy, foreign things. If the US dollar weakens, that's going to be good for US exporters, bad for US importers. And if the dollar weakens, we could end up having a trade surplus because American products become cheaper overseas. So I don't really particularly care about Brian's question here. I do think this thing about the trade balance and how the dollar is affected by that is testable. And if the Fed raises interest rates, that too makes the dollar stronger. The answer to Brian's question here is B, but I don't really think it's a great question. And what I think he's trying to get out is that if you're a U.S. company, I think he should have been a little more forthcoming about, is this Boeing? Because if it's Boeing, then we know they're going to be affected, right? In a very, bad way. So, but anyways, I think he's on the test content here is adjacent to this question. It's not really this question. Client has 25 years to retire, has 50,000. He wants to have 80,000 in income in today's dollars when he retires. What is the best asset allocation? I think this guy's pretty unreasonable. He's got $50,000 to invest. That's his present value. He wants a future value that'll pay him, Joseph, $80,000 a year off a base of 50? Are you nuts? I think the only thing that can possibly get you from here to there, Joseph, is NVIDIA. I'm joking, but right? I mean, man, if that's what he wants, the only way he's getting there is with A. I don't particularly like the question, but my goodness, right? Yeah, you're not going to do this with a balanced, asset allocation model. Right? By the way, on the test, it'll be a little more straightforward than that. What is the best analytical method to about why it's better to invest dollars today versus investing dollars in the future? Well, what's that? Yeah, right on. You got it, my friend. The whole point of DCF is to compare future value and present value, right?
Yeah.
Dollars today, that's present value, versus dollars in the future, that's future value, right? Now, DCF is applied to a stock, remember, would be called either the dividend discount model or the dividend growth model. And that is a valuation technique used for a stock with a dividend that we assume is going to grow. There's no such thing as A. That's just the wrong answer. And then D could have been testable. We said that is very testable. Dollar cost averaging is a timing device. What makes it work? Fixed dollars invested regularly. What's the end result? Lower average cost of the underlying shares. And does it guarantee a profit? No. What are the benefits of owning high quality corporate bonds? High quality corporate bonds.
Is it D?
Right on. D is the best answer given that answer set.
Yeah.
Which of the following constitutes a capital gain? A capital gain. I kind of like this one. I think it's kind of a funky way to ask it, but the way I think of this, Joseph, I don't know if it's helpful. I think of the capital gains tax as a transaction-based tax. A transaction-based tax.
Yeah, so I don't think it can be B.
Right on. There's got to be a transaction. You should definitely know C can't be right because there's nothing ever coming out of any kind of a retirement plan that's a capital gain. Anything coming out of any kind of retirement plan is ordinary income.
Yeah. Is it D?
It's no, it's actually A, right? That's a transaction. You bought the house low, that's your cost basis. You sold it for 150, that's your sales proceeds. And so you have a capital gain of $50,000. Now, I don't like what Brian's getting at here because this would be in the form of stocks on your test, not this idea of the jewelry or the 401k, or they'd be going to be a little more straightforward. All the following pay periodic interest except.
Strips do not pay periodic interest.
Perfect. Excellent. Excellent. XYZ has paid quarterly dividends for 20 plus years. Woohoo! They recently announced their fifth dividend payment for the year. What's true? Wow. So the board declares an extra dividend. Usually you pay quarterly, but the board has said, hey, we're doing.
Yeah, that they've had consistent earnings.
No, it's actually A is the better answer. We're doing so well, man. We're going to pay an extraordinary dividend. So it's A. Consistent's good. I mean, good, but A is better, right? Extraordinary. Every once in a while, I saw Ford paid an extraordinary dividend, a, a not a regularly scheduled dividend, Joseph. Everybody got this 10 cents. But I thought, really, has Ford really been doing that well? I don't find that difficult to believe. I mean, that's what they said. But then I figured out how many shares the Ford family owned. And that was at like $300 million in dividends for them. And to be honest with you, Joseph, I think a Ford family member just needed some money. And so they declared a dividend. Right. So Oracle right now, his son David Ellison has bought Paramount Skydance, and they're talking about buying some other things. And I wouldn't be surprised if Oracle declares a dividend. Larry has 2 billion shares, gets the dividend, hands it over to his son to go buy, CBS, or what was it? Or excuse me, Warner Discovery. Let's see, which of the following would be most similar to a corporate bond portfolio? I kind of like that one. So we're looking for another fixed income investment vehicle.
Preferred stock.
Right on, right on. What describes the amount of risk a mutual fund takes on compared to the market?
Beta.
Right on, good job. An individual with a large number of real estate holdings is looking to utilize an estate plan. What would they use with the least amount of tax implications? I don't really care for this one, but I would know that life insurance is a huge part of an estate plan because the sales proceeds are tax free, right? So we're going to put this insurance policy into an irrevocable trust. It's actually C. I don't really care that, it's an irrevocable. I just want you to know that life insurance is a good way to take care of the tax implications because the proceeds are tax free. Which of long is considered a current asset on the balance sheet? Right on, right on. What's the maximum sales charge of a mutual fund? Right on. The registration of agent could be denied by the administrator in which of the following? Right on. Good job. Good job. When a spouse is receiving a quadro required to make a required minimum, when is a spouse receiving a quadro required to make an RMD, a required minimum distribution? When he or she,
When
again,
they become 73.
yeah, right on. So what's the best way to say that? Brian, again, I think is being kind of weird on his language. That's B, right? You're correct. And the way Brian is saying that, that's B. Turns of age, 73, right? 99. Oh, here we go. Another one of these. You're long 100 shares. You believe it will rise. You'd like to sell the stock when it hits a specific price. Which order would you advise your customer to enter? So you want to sell it at your price or higher. Good job. Excellent. Excellent. An investor purchases an October 50 call with a premium of 75 and a commission of 20. What is the total cost to the investor?
It's just one contract?
Well, yeah, it says October. Yeah, it's one contract. We got you. That's not 2075. 75 cents times one contract times 100.
Oh, it's times 100.
Yeah, so that's going to be 75. And then the commission's 20, right? So go ahead, just do that. There you go. Now you're getting the $20 commission. You got to add that in there. And there you go. Boom.
Yeah.
An American depository receipt represents.
Oh,
What are
I
you
thought it
doing?
was 100. I thought it was 100 questions.
Oh, no, no, that's all right. I'm okay. Let's finish it. We're close. We're close. Right on. Good job. Right on. Which of the line counts give the beneficiary immediate ownership? The beneficiary immediate ownership. Yeah, you might not want to do this because when they reach the age of majority or up to the age 25, yeah, if you want to dictate terms, they're probably not going to do that one. An investor has an investment worth 10 during the year. He receives 500 dividends. It's now 10,005. The investor's a 30% tax bracket. What's their after-tax return? We talked about these performance measures here, right? And so here it's asking you, what is their after-tax return? So we got 500 dividends. We're going to have to pay some taxes on that. And we also have a gain, but we haven't sold it. So we have an unrealized gain. And so what is their after-tax return? So we're going to take the $500 times, there's a couple ways to do it. You can either times it by 70 to know what they keep, or times it by 30 to see what the tax is.
Will we start with the 500?
Yeah, that's what I would do. I would take the 500. There's lots of ways to do math. I'm going to take the 500, right? We know
I
we,
was gonna do, I don't know if this is right, but this was my thought. I was gonna divide that by 0.70. Is that doesn't help me?
divide. I don't know if dividing would work. And I think you could I was going to multiply it by 70, right? We get to keep 70% of the $500, or we got to give 30% to the government, right? So we're going to have 350 in income, right? You see, I did that. I took 500. Let me get out my annotation tool. So your point, we could do it either way. What I mean by either way is, so remember, this is this performance measure that we talked about. So what is my performance? I made $350 in interest or dividends, excuse me. And we said that's the income I've received. We'll put that in green. Right now, that we could have started by saying the government kept 150, whatever. Right. So now I got that. And then I made another $500 in unrealized gains. I haven't realized that yet, but I made another 500 there in price appreciation.
Do you mean 500 in dividends?
Well, no, I took the tax out of there. Let me show you what I did.
Oh, okay, okay.
Right. I took the 500. We had to give back part. It says after tax return. So we got $500, but we are in a 30% tax bracket. Where's my tax button here? Boom. Let's put that in red. So we had to give that to the government. Right. So we didn't get to keep that. So now that that's where I got this number. Right. 500, but then you pay your taxes. Your taxes were in 50. Do you see where that number's coming from now?
Yeah.
Okay, so we got that. That's where this number comes from. Oh, and then we said this is again performance measures. And this is total return. So they're asking me total return again. What I made from income plus what I made from price appreciation. Now, by the way, I haven't realized this yet, but so far I've got this, I've got that. I don't owe taxes on the 500 because I haven't sold it, right? So I have made $800, boom, or excuse me, $850. And to make that $850, I spent how much to make that? I may have spent $10,000. And so it looks like I made 8.5%. Now, how'd you come up with the 10? Oh, you took the 500 and the 500?
I couldn't even do it, honestly. I
Okay,
just
that's all right. Don't beat yourself up. It's late at night and don't beat yourself up. Give yourself some grace. The reason we're not taking, we'll go back. The only reason we're not doing that, it says after tax, right? So I have to pay the tax. You see where I'm getting these numbers? The 30%, that's this number,
yeah.
right? So I wouldn't, don't beat yourself up. That's not bad. What investment has marketability risk? It has, let me, oops, sorry, let me clean up your screen for you.
This would be liquidity.
Right on, right on. A business produces a gear for cars and the competitor created a similar gear that impacted the business stock price. What type of risk? Very much a test question.
Business.
Yeah, and you can diversify, right? You can have more than one stock. Your client owns a portfolio with a beta 1.3. The market went up by 10. During the same time, the portfolio gained 11. What is the alpha? This is very much a test question. I like it. It's testing on, do you understand that alpha could be positive or negative?
I think it can be negative.
Yeah, you can underperform. I mean, here you're going to be upset, right? You say, well, Dean, I made 11. Market went up 10. I did great. I said, no, you didn't, Joseph. For that amount of volatility on the beta, you would expect to get 13%, my friend, and you only got 11.
Yeah.
So bad form, man. You got negative alpha going on.
There's a way. Try something.
Let's just go through this, by the way. For A to been the right answer, it would have to be 14%, right? Because 10 times 1.3 is 13%. That's our expected return. Two would be 15%. C would be 14.3%. And the answer is D as in dog. That's what you just did there is our expected return. Well, if you would have stopped, right? If you take the 1.3 times 10 that you just did
Yeah.
on the test, that would be called expected return.
Okay.
We would expect to get 13% on a stock with a beta 1.3 when the market went up 10. So you were on the right track, 1.3 times 10, 13, but we got 11. So we're not happy. Are we clear we're not happy? Because that's negative alpha. Alpha is the excess return over beta, in this case, the minus number, right? So 11, it's D, right? Because that's the amount of the difference, right? 11% minus divided by the 10, you can however you want to get there. I think it'll be a little more straightforward on the test, but I do like the test. I do like that question. What determines eligibility for full Social Security benefits?
To the age of 62.
It's the 40 quarters. Who cares? I mean, as Brian it says,
I had a feeling it was that.
yeah, it's 40 quarters. I mean, who cares? 108 is very, very testable. I can't imagine any draw where you're not going to see that. Very testable. There's no way to really come up with a price because there's no company yet. So on SPACs, blind pools, the answer is B. That's very much a test question. We're going to raise the money. We're going to escrow it. If we don't find an acquisition, because what we're going to do is make an acquisition using the stock as the currency. If we don't make an acquisition within 2 years, we got to give everybody back their money. So that is very much a test question to know that the public offering price of a SPAC is $10.
Okay.
All right, I'm going to leave it to you, my friend.